Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down, or sideways, by taking only high probability and low risk trades that have maximum forces from the market, sector, industry, fundamental, technical, and even seasonality in their favor. I will revisit some trade ideas or market analysis I shared recently and review how that played out. If the market situation is appropriate, I may also look for some buying or shorting opportunities that you may take next week. We'll find out the market situation during today's session. How do you use intraday charts in swing trading? Intraday charts are key to intraday trading. It requires fully real-time data. What about swing trading? Do you need or use intraday real-time charts? Some swing traders don't use or have real-time data. They are okay to trade even profitably and consistently using end of day and or delayed data. That is probably fine for trading systems that tell one to buy the day after the trade signal day. Q is different. Q allows buying a confirmed 360 setup at or near the close. It requires real-time data to run Q Finder to identify the trade setups in the first place. Real-time data is not nice to have, but is essential for that. The question is, does that need intraday charts? The answer would be no. To find swing trade setups near the close, one needs real-time data, Q Finder, and a weekly daily at a glance chart layout, but not intraday charts. When could one use intraday charts in swing trading then? If you take a swing trade the day after the signal day, when a trade setup is confirmed, that is called signal day. You take the trade the day after the signal day near the open, then you will use the real-time intraday pivot chart for precise entry. You could use the early range breakout technique or a pivot reversal technique. The direction is already decided the day before, that is the signal day. You use the intraday charts the next day to trade only in that direction. Sometimes you will get a better feel and other times worse feel than entering on the signal day. Over many trades, entering on signal day gives slightly better overall result for 360 trades. Q does not use the same template for intraday, daily and weekly charts. Some trading systems use the same chart template and change the interval from weekly to daily to 5 minutes. Q is different. It recognizes the benefit of more responsive signals and techniques for intraday charts due to the more volatile nature of smaller time intervals, for example 5 or 10 minutes. Hence, the intraday Q pivot chart uses zero lag or near zero lag very fast indicators for swing trading, precision entry and for intraday trading. What will be an example of a zero lag indicator? That will be the Q memory trend line support resistance and also Q intraday pivot lines, support resistance. Near zero lag and very fast indicators will be like bull and bear release on intraday time frame. There is one more use, and this is less frequently used, of intraday charts in swing trading. That is to decide a preferred trading direction when the other analysis, market external and internal view, technical breadth, sector industry stock breadth, etc., do not lead to a conclusion. Can that be the case today? We'll find out later in the session. Greetings, I am Sagar Nandi, retired IT professional swing trading stocks in the USA and India markets using only one system and techniques, Q. You may contact me using my email IDs info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risk of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and TradeStation platforms. It has multiple components. I'll use several of them today. Let's start with dollar index. In the daily, where it displayed the unique bearish headwind reversal signal, it created a watermark pivot resistance and then created a false upside breakout at that resistance and also displayed a bear release signal. In the weekly also, it created or almost created a false upside breakout. In addition to that, it is at price extreme high and jump thrust high. I had noted that situation earlier too, from where a big move down 3 came and price came down. It is not at as much jump thrust high as it was earlier. You can see that from the color differences in jump and thrust. But still, looking at the jump thrust price extreme high or approaching that and the bear release signal and the false upside breakout in daily weekly, I am anticipating dollar index to come down at least to the trend line support. And when it comes to the trend line support, there is also yellow direction line support. It will it will possibly find robust support at that point, but there is some distance to the support and I'm anticipating it to come down. If that happens, that may help the stock market, though that correlation does not always work. The other instrument that I look at regularly to see how market may be influenced is the mega cap index. Mega cap index is very unpredictable now, having wild moves shown by the megaphone pattern in the weekly interval. In the daily, it is bearish in color, though the shape is indecisive. And if you notice, just for a couple of days, the relative performance is coming down, so it is underperforming the market, though it is of course still in a very robust uptrend. It is in an uptrend, but the momentum candle color in daily is bearish. This is also an instrument that is at price extreme high, jump high, not thrust high, but jump high, and then we had a big move down 3. Though there is no thrust high, it is a custom index, it is not a stock. Based on this incomplete pattern, you may say, I am expecting it to come down from here rather than go up and make a new all-time high. It is looking more bearish than bullish to me, not a time to buy. I may look for mega caps giving a low risk shorting point. This index itself doesn't have any short setup, but I look for mega cap stocks to give low risk short setups in the coming week. One mega cap stock that I shared a bearish view on and I mentioned I had a bearish position in was Nvidia. Let's look at how I managed that position. This is last week's chart of Nvidia that I shared. At that time, weekly was breaking the trend line support, and in daily it was still inside the triangle pattern, but I mentioned I had a short position and I was anticipating the trend line supports here in daily to break. That was 1 week ago. And today, using the historical trend lines, you can see it broke the trend line support. This was last Friday, 1 week ago, not this Friday, the one prior to that, when I mentioned that I was holding bearish position in Nvidia. Then on this day, it broke the trend line support but closed with a lower tail. That was Monday. And I tweeted at that time that looking at the lower tail, I booked profit in some of the positions. I'm continuing to hold the remaining bearish position in Nvidia. If this trend line resistance is broken, then I may consider closing the remaining position. I have closed enough position in Nvidia so that even if the trend line resistance is broken to the upside, I'll end the trade with a sizable profit. In fact, I had multiple Nvidia positions, and see how I am managing it. I had short position using stocks. I had short position using long put, and I had short position using long put vertical. On Monday, when I decided to book profit, I booked profit in the long put first, then I also booked profit in the short stock position. I am not holding only the long put vertical bearish position in Nvidia, and that expiry I chose to be after the new president's inauguration. So I am not in a hurry in terms of time decay. I have a sizable profit even in the put vertical. I'll see if I need to close the trade right when the trend line resistance is broken, or can I wait a bit based on how the other market pockets are moving. Because I have booked partial profit in the trade, I am in no hurry, and because the expiry is also quite far away. This is what I try to do in my swing trades: book partial profit at a reasonable level quickly to make the trade risk-free as soon as possible. One index like mega cap index that I don't share in every market recap because it is not useful, and I also don't have time to share everything in every market recap. That is leaders index. This is also a concept that I learned after watching Dr. Jeffrey Scott's videos. Thanks to him, I incorporated it in Q market breadth, and this is leaders index today, and it is worth watching it. In daily, Friday's candle is indecisive. In shape, it even has a bull release signal. However, we had jump thrust high, price extreme high, and then we had big move down 2 times in recent days. Could we buy now based on Friday's candle? No. And another reason that is preventing me to buy not only this index, buy stocks in general, is the fact that leaders index has decisively broken down in the weekly interval. The concept is that leaders index is made up of the leading stocks, the best stocks in all the sectors. It's a custom index, and you see it was going up and up and up, even better than the market ETFs, even probably better than QQQ. But now it has broken down the trend line supports, and these supports work really well, so I am wary of buying stocks now in general from this angle, but we'll see from some other angles we may be able to buy. And then finally, combining everything, we have to conclude whether our preferred trading direction is bullish or bearish or stand aside. We'll come to that conclusion by the end of today's session, as we always do. Q market breadth, invaluable in assessing the internal health of the market and anticipating a change in market direction. Last week, this is what I shared in terms of total view, the broadest view of the market. I pointed to the bearish divergences, the Hindenburgs, and I clearly mentioned that my view on the market was bearish and that I was holding only bearish positions. How did the total view turn out? This is as of today. The bearish divergences worked, and on Friday the divergence is broken. Price fell down after the bearish divergence. After the irrational exuberance, Bango signals, thanks to Mr. Ian Woodward, may him rest in peace, after the confirmed Hindenburgs that came in both NYSE and Nasdaq, and after the Phoenix signals, heavy selling at the top. Again, thanks to Mr. Ian Woodward. It did come to the extremely oversold level in terms of 3-month new high low and ticked up. Normally, I would start to look to buy. However, the percentage of stocks above 50-day moving average, another useful oscillator, is not yet at the extremely oversold level. In the last market recap, I showed by looking at the point when 3-month new high low hit the upper extreme overbought level, that hitting extreme overbought level did not mean the candle chart could not go up, and I mentioned that hitting extreme oversold level will not mean that the candle chart will necessarily go up from here, but it is useful in identifying some stocks that may go up, not useful in predicting how the candle chart will move. The percentage of stocks above 50 MA is more useful in terms of predicting where the market may move once it hits overbought oversold level, but that is not at oversold level yet. And another reason I am not willing to buy a lot is that there is zero accumulation on Friday. Zero. Not a single pocket showed accumulation, and of course there is no Eureka signal that is equivalent to the follow through day in CAN-SLIM. Again, Eureka, thanks to Mr. Ian Woodward, may him rest in peace. Of course, the Eureka did not come. Based on this chart, it is therefore not a time to buy for me. If I drill down from the total view to the Nasdaq and NYSE, we notice that the Phoenix signals came in NYSE, and NYSE 3-month new high low hit the extreme oversold condition and tilted up. Percentage of stocks above 50-day moving average not at oversold level yet, and for Nasdaq 3-month new high low hit the extreme oversold condition, but percentage of stocks above 50-day moving average did not hit oversold condition. There was no Phoenix or heavy selling at the top in Nasdaq. It shows NYSE fell more sharply with Phoenix signals. It is more oversold looking than Nasdaq. None allows buying as there is no Eureka or accumulation count. And I will quickly go through the major index breadth now. Nasdaq breadth, Nasdaq 100 that is, 3-month new high low oversold, percentage above 50 MA not oversold. No buy or short signal here. Dow Jones Industrials not oversold from either angle, no buy or short signal here. Russell 2000 oversold in 3-month new high low, nearing oversold but not there yet in percentage stocks above 50-day moving average, may start to shortlist buy candidates but not the time to buy yet. S&P 1500 more oversold in terms of the two oscillators than Russell 2000. Interesting. Russell 2000 is continuing to be weak, but S&P 1500 is actually more oversold looking when we use these two oscillators. Obviously, that is not because of the mega caps. It is for the other stocks, non-mega cap stocks. It is looking very oversold, though percentage of a 50-day moving average is not at extreme oversold level yet, may start to shortlist buy candidates. And interestingly, if we look at S&P 500, this is the only major index pocket that is actually extremely oversold in both the oscillators. Here may start to shortlist buy candidates. So large cap is the pocket where one may start to shortlist buy candidates more than in other pockets. Interesting. I was expecting small cap to be that pocket before I looked at this analysis, but this is showing that if we are expecting an oversold bounce, we may expect that more in S&P 1500, this large cap stocks, more than Russell 2000 small caps, because Russell 2000 may need to dip a little bit more before it gives us an oversold bounce. What is the external view of the market? I'll again review what I shared in the last market recap for some pockets and see how that played out. This is a view from Finder Performance on the market ETFs. Notice few things. Firstly, this week all the market ETFs are down by large percentage. Very beautiful and profitable, isn't it? Because last market recap I categorically mentioned that I was not holding any long position I was holding only short positions for my short-term trading. I made a nice profit because all the market pockets fell. IWM fell by a massive 4.7%. Even the best performer, QQQ, fell by more than 2%. Notice now that DIA and IWM are now down from period 1, that is week 1, to week 6, that is 1.5 months. Slow but steady decline in DIA IWM for 6 weeks. SPY is down for 1 week to 4 weeks, that is up to 1 month. QQQ is the strongest, relatively speaking, down for 2 weeks, 1 week and 2 weeks. Now if you look back and watch my videos, watch my tweets, I was able to once again start shorting little bit ahead of others, yet with high success rate. That is the secret of my trading profitably, open secret, using the breadth indicators, breadth charts, using a holistic view. I'm able to anticipate the move, and the anticipation works out quite well. Not 100%, I don't need 100% accuracy, just enough accuracy to make a profit, and that happened this week too. Now let's look at some charts I shared last week. QQQ. This is what I shared in the last market recap. There was a trend line support here. There was a bearish headwind and bearish indecision. This is exactly what I said. If the memory support breaks, that may give a lucrative shorting opportunity. Which memory support? This one. Did it break today? Indeed, the trend line support broke. The weekly backdrop color turned bearish with a bear release signal, and even more significant, with a bearish reversal. On Friday, we have bearish momentum color, though the shape is indecisive, and there is yellow direction line, possible support not far from Friday's low, though it is quite far from Friday's close. One reason I am not willing to buy though, firstly, of course, there is no buy setup. Weekly, daily, both colors are bearish. And then again, it is at price extreme high, jump high, not thrust. But we have a big move down 3 from jump high and price extreme high. Incomplete pattern, but that is also a concerning pattern, not allowing me to buy, though I may not short it as well. The best time to short QQQ was when the trend line support broke. And I talked about that possibility. If you used Q Finder in real time, you could short QQQ when it was breaking the support. If you were short, good for you. If you are not already short QQQ as of Friday's close, there is no short setup. Last week, SPY. This is what I shared in the previous market recap for SPY. And this is exactly what I said. Moving sideways in daily, if not for mega caps, it would be coming down. That is what I said 1 week ago. What happened after that? It certainly broke below the sideways pattern. Friday's candle shape is indecisive. It even has a bull release signal, and it is at the yellow direction line support. Price closed above the yellow direction line support. Not only that, it has a bull release and also a bullish pressure U-turn. Though the bullish patterns are there, the daily shape is indecisive and also the weekly color is bearish. It has a lower tail, but it closed below the trend line support. If you combine weekly daily, then it is indecisive. It is not allowing me to short, it is not allowing me to buy as well, in spite of the bullish signals coming on Friday. Dia, in the last market recap, we were here, and I specifically mentioned that I had a bearish position in Dia. That worked very well, isn't it? On Friday, we have a bull release signal. You notice the similar candle shape on Friday across the board in all the market ETFs and also in many of the custom indexes. It fell significantly from last market recap. It is oversold, was oversold. Then we had a bull release signal on Friday. I had a nice profit in Dia. I booked profit in the entire Dia bearish position. Notice also that using the bearish headwind at the top and the first bearish flow, after the bearish headwind, you could initiate a short position in Dia with very low risk at or near the very top. In weekly, the trend line support held, but the bearish backdrop color is there, shape is indecisive. Weekly, daily, both shapes are indecisive. That does not allow me to buy, does not allow me to short. The concerning part is the pattern again. Price extreme high, jump thrust high, then came big move down 3. Of course, big move down 3 came quite low in the price swing pattern, not near the high, but still this pattern is making me concerned and not allowing me to buy. Not that this is the only reason the weekly daily together also indecisive, but this pattern is also something I am keeping in mind. If anything, in many of these instruments, if they recover a bit and comes down again, those are two ifs, but if that happens, I will be quite comfortable in shorting them using probably the flow trend following short setup at a higher price level. I would not like to short now. I indeed booked profit in my bearish position in Dia. And IWM, interestingly looking very similar, isn't it? We were here last Friday when I mentioned I had a bearish position already in IWM. Again, on Friday, it reversed somewhat, though the shape is indecisive. It is oversold. So again, looking at the oversold but still bearish condition, I have booked full profit in IWM bearish position. Looking back, when the bearish indecision at the top came and it created a false upside breakout. At that time, in the market recap, I mentioned the false upside breakout could be a time to take low risk short entries. You could also short using the bearish flows that came after that. All of those turned out to be very profitable, as was in my case. The more you watch how I am using the signals to reversal take reversal trades, I hope you will be more and more comfortable to take that. If not taking reversal trades, you could at least book profit in long positions or protect profit in long positions when I am starting to take short trades, reversal trades in these instruments. IWM does not allow me to buy now looking at weekly daily, but it is too late to short. Bucket analysis and sector industry stock breadth using Q edge helps to decide preferred trading direction that may be different from the current market trend. Bucket analysis. Thanks to Dr. Jeffrey Scott again, I started using it and made it real time. After watching his videos, works like a clockwork. In the last market recap, I mentioned that this bucket analysis as an oscillator is more predictive of immediate market move than 3-month new high low. That was proven in the current week. The percentage of stocks below lower Bollinger Band on Thursday was more than 30%. On Friday, it came down to 17.8%. Every time it hits 30-40% or more, in fact, during the day, some day of the last week, it hit about 60% below lower Bollinger Band. We could expect a bounce, oversold bounce from that point, and that indeed came on Friday. That did not come before Friday. Friday sector industry stock breadth, everything is green. However, the market is still very bearish. 89% of stocks are still below mid Bollinger Band. So it is a bullish move on Friday, but very much an oversold bounce move. That too in indecisive candles across the board. Still, looking at the sector indices stock breadths, looking at the lowest Bollinger Band or lowest bucket recovery, if anything, this plot allows us to buy, doesn't allow us to short anymore. So this allowing us to buy may not be enough reason to buy, because we have to look at all the analysis together. Still, I note that this plot allows me to buy. And if I look at sector industry stock breadth over longer term period, 1 month to 10 days, it became more bearish. 10 days to 1 week, this week, became even more bearish, and then it recovered. Over 2-day and 1-day period, the recovery really came on Friday. If anything, this pattern allows me to buy again, doesn't allow shorting. But again, this plot may not be enough reason to buy. Technical breadth, invaluable in deciding preferred trading direction from breadth charts, and then find unambiguous technical setups for individual stocks. Weekly breadth. Remember a couple of weeks ago when I shared the weekly technical breadth, I pointed to the bearish headwind alert at that time. That is a quite effective indicator of what may come next, especially in stocks at very high price level, because the headwind signal comes at very high price level. That worked very well. Market came down. Weekly technical breadth is bearish across the board and oversold, because all the buckets, all setups, trend setups, continuation setups, reversals, all are well above 80%. That is oversold condition. But we don't have any bullish headwind alert in the weekly interval, does not allow me to buy, too late to short. Daily breadth is different. Very strong overall bullish. Strengths are also bullish. continuation bullish, even reversal bullish with significant number of reversals on the bullish side. This allows me to buy. On top of that, it hit jump thrust low, so much so that it had a jump thrust low alert, oversold alert, extreme oversold alert here also. And then we had green candle low, so much so that we had a green candle low bullish alert. On top of that, we had a bullish headwind alert. Of all the analysis I shared so far, this is the plot that allows me to buy the most. But is it still enough to start buying? It may be. This is the most bullish analysis of all that I shared so far. But I did not buy stocks on Friday. I may watch how some of the buy setups in Q Finder, these stocks, probably I will favor the reversal stocks because they will be very low risk trades. They may be in strong fundamental stocks and in accelerating, that is reversing industries, turnaround candidates. I did not buy any stock on Friday. This week's theme, back to that, the preferred trading direction is not so simple to arrive at this week. Oversold bound possibility exists in some pockets from multiple angles. Bucket analysis, technical breadth rally, 3-month new high low in some pockets, percentage of stocks above 50-day moving average from S&P 500. However, other angles, no accumulation count or Eureka. Eureka usually we will expect after a few days after the turnaround day. Maybe we had a turnaround day on Friday. Eureka may come later, but accumulation count also did not come. It is more instantaneous than Eureka day. It may coincide with the turnaround day if it is bullish enough. So we did not have a bullish enough day on Friday, and the candle shapes across the board were indecisive with upper tail. Weekly technical breadth remains oversold but bearish, no bullish headwind, and secondary stock breadth for the week are also very bearish. So it's not conclusive. There is some tendency in me and probably many other traders to buy on Friday. I did not buy. Can the intraday market ETF charts help to decide for buying or against buying? Let's find that out. And for that, I look at the market ETFs using the daily interval and then reduce the interval to see the intraday charts. Of course, daily interval QQQ, I already showed there is not enough bullish signal. But if I change it to 60 minute, does it allow me to buy? Using the Q entry concepts, it does not allow me to buy because Friday's candle is still bearish in momentum. It is still downtrending. If I change it to 30 minute, it is still downtrending, still bearish in momentum color. And I may go up to 10 minutes, still very much bearish in momentum. It was moving inside somewhat of a range at this point, and price could not close above that range. So in no way QQQ is allowing me to buy even using the intraday intervals. And let's look at least one more, SPY. Why SPY? Because that was the most oversold from breadth charts. Again, the daily itself is very inconclusive. Indecisive shape does not allow me to buy. If I change to 60 minute, Q does not allow me to buy. Very much in a downtrend, and the last candle is very bearish. If it closed somewhere here, maybe I could consider buying some stocks at the close in SPY, the most oversold pocket, but it did not do that. 60-minute interval does not allow buying. 30-minute, same, does not allow buying, and I may go up to 10-minute, again, does not allow buying. And the beauty of these charts, at least for me, is that I don't have to overthink. Just a simple glance at the chart tells me that it is not possible to buy using Q setups at this point. And let me go to IWM, the next most oversold pocket. You may go through the dia charts yourself and some other instruments if you wanted to. Again, IWM daily is not conclusive in bullish direction, changing to 60-minute, very much in a downtrend, closed with bearish momentum, does not allow me to buy. 60-minute to 30-minute now, very much in a downtrend, closed with bearish momentum, does not allow me to buy. Lastly, I may go up to 10-minute, does not allow me to buy. Market level summary then. Some market pockets are so extremely oversold that an oversold bounce is likely, not guaranteed. Oversold markets may be more oversold. Friday was an up day, but there was no accumulation count, and the candle closed with indecisive shape. That did not allow buying at the close on Friday, and the intraday analysis of the market ETFs, which is not required or useful every time, but in this case I believe it was useful, that also did not allow us to buying in any of the pockets at the close on Friday. Mega caps and other high flying stocks, we saw the leaders index, are still overextended, just breaking down at the very top, overextended to the upside. Those may not be ideal buy candidates anyway. Oversold and fundamentally strong stocks may give lower risk buy opportunities if the market shows internal strength through accumulation count or Eureka in the coming days. Review of last week's trades. I mentioned not a trade but a stock in my watch list to be added, KSS, very high dividend paying stock, came down. I look at the charts later. It was not a buy setup, it did not give a buy setup. Nvidia, I was holding a short position. I booked partial profit as I already mentioned, closed that with a profit, holding partial position with long put vertical. Dia IWM, I was holding short position, closed both of them fully. And Agro is a stock that I shared 1 week earlier, fell sharply. That is, I shared 2 weeks ago. 1 week ago, it neither hit target nor hit profit and nor hit stop, but this week it hit profit comfortably. Let's look at these stocks using the charts now. Coal, KSS. Why I chose this stock was because of the bullish headwind and the high dividend yield, and I mentioned that after Fed rate decision Wednesday, if the reaction of the market was favorable to high dividend paying stocks, then it could give a very low risk buy point, but it did not, right? On Wednesday, after Fed rate decision, which was probably more hawkish than people expected, at least the reaction shows that across the board, high dividend yield stocks, at least KSS, did not do well. It did not give any buy setup, so it would not be taken on the long side, and I did not take it. Nvidia, I already went through it. I will not go through it. Dia IWM, I already went through it. And AGRO is a stock I shared 2 weeks earlier. That was a 360 degrees short setup. I shared it on Friday here. Last week it created a reversal candle in weekly. I noted that. And this week it fell sharply. Covered much more than the risk distance, and the trade would be closed with a profit. Another bearish trade I took probably well before Others were starting to turn bearish, shared it publicly, closed well. This week's trade ideas, it is generally a bit too late to short now, and there are not enough bullish signals to start buying, though that may come next week, may not come. I'm not looking for any buy or short candidates today. Therefore, not going to share that also. If I'm not looking at it myself, why will I share it? I continue to hold some short positions. I mentioned some of them, all with a profit cushion. And incidentally, all with options, verticals, and all with expiry after the new president's inauguration. So they are verticals. They are not going to suddenly go against me or in favor of me by large amount. And the time decay is not a factor. I will continue to watch the market and exit them if I need to. Thanks a lot for joining. Let me end today's session here. I look forward to seeing you in my next session. Not sure if I'll have it next week, but I'll let you know coming to the Christmas New Year time. Celebrated worldwide, isn't it? Have a great weekend, and as I always say, as these live examples, I'm quite confident shows there is no reason not to do that. Trade profitably. Thank you.